demystify, learn. BQ Learning. Only on Bloomberg Quint.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Vakil. Here are the top headlines. Asian markets open lower as concerns over a looming trade war take center stage. China and the US threaten each other with new trade tariffs which could affect trade worth $200 billion. Vedanta will replace Dr. Reddy's on the Sensex effective today. And the telecom department is set to approve the Vodafone Idea merger today, reports PTI. Now, it's getting more and more difficult to keep track of President Trump's trade standoff against what seems like the entire industrialized world, with Washington getting into spats with everyone from Canada and Mexico to China and the European Union. And the new round of growing US-China trade spat follows Trump's announcement of introducing tariffs on $50 billion worth of Chinese goods. In response to the unfair trade practices, Beijing answered by introducing tariffs of over 100 US goods, bringing the world to a brink of trade war. Tom McKenzie of Bloomberg News has this report.
Yeah, so this is the China counterpunch, and they're taking aim with this first round of tariffs that they're going to kick in on July the 6th at sectors, agricultural sectors primarily. So we're talking soybeans, corn, wheat, but also the automakers as well. We've got a terminal chart, in fact, that shows that US has a significant surplus in terms of auto exports to China. China just sending over just a fraction of the number of cars that the US exports from that market. So look for an impact on Tesla. Of course, they manufacture all of their cars in the US, but they've seen a 90% tick up in sales here in China in the last 12 months or so. So they're likely to feel the squeeze, as are some of the German automakers, particularly BMW, that sends over a lot of cars from their factories in the US to China. Soybeans, China imports about a third of all the exported US soybeans. So that is also another pressure point that we've been talking about for some time around these trade talks. The second tranche of tariffs that China is talking about on $16 billion worth of goods would be implemented after that July the 6th deadline at some point, and that would focus on coal, oil and gas. Interestingly, China has recently said it wants to increase its imports of US coal, and that is a sector, of course, that Trump has said he wants to revive. Already, 2017, China imported about $400 million worth of coal from the US, so another pressure point, as is oil. China is the third largest buyer of US exported oil. So clearly the tactics from the Chinese seem to be trying to pressure the Farm Belt states, but also these commodity producers, hoping that that will lead to some kind of change in stance from the White House.
So, Tom, how is this likely to play out from here? Are we likely just to see more of a trade skirmish, or have we reached a point where both sides can't exactly back out from these tariffs now?
Well, there's always a chance between now and July the 6th that someone pulls a rabbit out of the hat on this and you get some kind of resolution. But as your guests this morning have been suggesting, that's looking relatively unlikely. Whether or not Trump then goes ahead with this additional $100 billion worth of tariffs is something that is being questioned and, of course, would raise the bar significantly. And in terms of how China would react to that, then it's unlikely to be able to match that $100 billion US. What it may do then is start to tackle investment, US investment in China, particularly around some of the big corporate players. They're already raising those tariffs on automakers. They could make life much more difficult for some of the likes of GM and Ford, who operate here and get a substantial chunk of their revenues from the Chinese market. Companies like Boeing, you could see some of the big state-owned aircraft airliners here in China start to cancel or change some of their Boeing orders. Those kind of measures could be taken by China, which would really up the ante, particularly for the corporates, US corporates operating here. Look, China has a playbook that it's used in these situations. It's used it against countries like South Korea, against the Philippines over geopolitical spats to pressure those companies that operate in the Chinese market. It could do that again. So that is potentially what we're looking at in terms of how things unfold. Of course, China will also be helping that if those additional $100 billion worth of tariffs are imposed, then that will have an impact, of course, on US consumers. It may have an inflationary impact, and that will also potentially potentially lead to a change of heart from President Trump. But certainly the focus now shifts back to Washington and what the response there is from this latest counterpunch, or this first counterpunch, I should say, from China.
Well, staying with the US and China, Wall Street stocks ended lower on Friday, capping a day of heavy trading, with investors mostly pulling back after the United States announced tariffs on $50 billion worth of Chinese goods, prompting Beijing to warn of retaliation and reigniting fears of a trade war between the world's two largest economies. And investors are also weighing the fact of tightening monetary policy by the central bank on the equities market. Friday also marked a quadruple watching day, the quarterly simultaneous expiration of the US options and futures contracts, which tends to boost trading volumes as investors replace expiring positions. And volumes hit the highest point since February 8th, when the S&P 500 sank to its lowest levels in the year so far. Of the 11 major sectors of the S&P 500, 6 ended in negative territory. With that said, let's take a look at how the Indian markets fared last Friday, and also what we can expect going into today's day of trade. Now, let's just begin with the SGX Nifty. It is indicating a negative opening in today's day of trade. This is largely on account of the weakness that we've seen across the globe because of the impending potentiality of the trade war happening. That said, in terms of what really happened, in the previous few sessions, let's take a look at some of the other big movers. In terms of the indices, we're looking at flattish moves for the Nifty, but the mid cap and the small cap continue to move downwards. So a lot of divergence between the large cap indices and the mid cap indices. The Nifty Bank, of course, also declined, but a lot of this pressure came on account of the Nifty PSU Bank index, which also bear down on the indices in general. Now, when it comes to the Nifty IT and the Pharma Index, those are the two green islands in a sea of red out here. Of course, the Nifty IT Index essentially on the bare gains which we saw on the large caps, and Nifty Pharma as well, seeing a substantial amount of moves on account of the large cap indices. But again, in terms of the month-to-date performances as well, we've seen Nifty Pharma inch up higher, and that's the reason why we're looking at that big up move there with respect to the likes of Sun Pharma, Cipla, or for that matter Lupin. Nifty Energy surprisingly also doing relatively better than some of the other peers, and of course the Nifty IT index was largely lifted up because of the moves and the strength that we saw in something like a TCS and Infosys over the last few days. Nifty Infra and the Realty indices, however, continue to show weakness, and a lot of weaker counters out there. We continue to track some of those moves as well. On a year-to-date basis, it is, however, the Nifty IT index, and this time it's not just something about TCS or Infosys, it's from the mid cap as well. A lot of strength is coming in from the mid caps. Nifty PSU banks, of course, no prizes for guessing. It is the weakest index as far as year-to-date moves go, and Nifty Realty as well, not too far behind. But what does it mean for the India VIX? Well, despite the fact that we did see a lot of volatility on the indices, and both the Sensex and the Nifty did end in the red, well, the VIX actually declined by as much as 0.3%. And in terms of the area picture overnight, what we've seen is a lot of strength come through for the likes of Dr. Reddy's, Infosys, and Wipro, along with HDFC Bank. Of course, a lot of exporters doing well, and Vedanta, ICICI Bank, and Tata Motors, on the other hand, losing out. So we'll be watching out for these cues as well going in. It really hasn't changed when it comes to FII action in Friday, because as you can see, despite the fact that there was some suspicion that FIs may have come in and bought, that isn't the case. In fact, a net seller figure of well over 15 crores, and DIs, on the other hand, playing their part and, playing on discounts, coming and buying in as well. Now, in terms of weightage and what's really kept the indices in the green, as you can see, is essentially Infosys, TCS, and Reliance Industries. It was these three companies that came in and kept the indices relatively buoyant. On the other hand, ITC, SBI, and L&T, along with HDFC Bank, continue to show weakness and bear down on the indices. Let's take a look at some of these futures and options. Now, again, we've seen some accumulation of longs in the Nifty, and when it comes to the Nifty Bank as well, we did see a cut of around 0.5%, but that's when we started to see some longs unwind on the banking index. When it comes to changes in open interest, more unwinding in the 10,500 put and the 10,900 call. So we'll be watching after that. It was an unusual day of movement when it comes to the Nifty, and well, it really doesn't give you a perfect trend, so to speak. But for now, in terms of the way the market is expecting the range to move and the Nifty to move within, that is the 10,700 put, that has maximum OI, and 11,000 call. So it's the 300-point range, which may provide you with a rough estimate of range going in. And the put call ratio for the Nifty, of course, moved up higher to around 1.57. And when it comes to the Nifty Bank, that also moved up, or rather moved down to around 0.76 from around 0.87. In terms of the F&O band, we have Diwan Housing, Jet Airways on Just Dial. Berhampur Chini, on the other hand, moves out of the F&O band, so we can expect some increase in volumes there as well. And when it comes to some other stocks I'm watching out for, a lot of pharma stocks out there, seeing fresh longs building up. In fact, Torrent Pharma up around 2.5%. We've seen open interest increase by 30%. Is the same for Berger Paints as well, moving up. So, and in terms of one more stock that we can bring out is Ajanta Pharma from the pharma space too, also looking at fresh longs. So a lot of counters out there moving and advancing higher, but essentially from the pharma and the IT space. And well, we're just going to have to wait and watch whether or not the trade wars have any sentimental impact on some of these export-based companies. That said, well, let's bring in Soumit Sarkar, because we have a Sensex rejig, and we'll have Soumit to tell us about what's coming in place of what in the Sensex and what does it mean for the indices. Soumit, over to you.
So if you see, effective from today, Vedanta will be replacing Dr. Reddy's on the S&P BSE Sensex Index, and this change will lower the weightage of 6 out of the 11 sectors in the Sensex. Now, banking, auto, capital goods, utilities, healthcare and telecom will see a drop in their weightage effective from today. Now, the pharma sector or the healthcare sector will have only one stock in the Sensex, that is the Sun Pharma, and the weightage of the sector will now be at its 8-year low of just 1.7%. Now, the BFSI sector, that is the most dominant sector on the Sensex with 8 companies, will see a minor drop of around 40 basis points, but still the weightage of this sector will be at highest at around 40.4% effective from today. Now, with Vedanta's inclusion, now after nearly 3 years, the metal index, the metal sector will have 2 stocks in the Sensex. Now, that will be Tata Steel and Vedanta, and the weightage of these 2 stocks will be 2.6%, which is the highest that the sector has seen in the last 5 years. Interestingly, 18 of the 31 stocks in the Sensex have been a part of the Sensex for the last 10 years, and the consolidated weightage of these stocks have declined by around 130 basis points to 77.7%. Reliance Industries weightage has declined to around 9.1% from 15.4%, while that of HDFC has increased to around 11.8% to from 3.5%. Also, capital goods and telecom sector will see a new lows of their weightage. Now, Bharti Airtel and L&T are the only stocks that are representing these 2 sectors, and the weightage on the Sensex of these 2 stocks has come down to around 4.7% and 1.2%. Lastly, real estate sector and the cement sector will continue to have no representation on the Sensex from today also.
Soumit, thanks for joining us and giving us that update. We will be watching out for that big rejig on the Sensex 330. But moving on, let's take a check on the rupee and the bond markets. The Indian rupee fell below the key 68 mark to end at a fresh 3-week low of 68.01 against the US currency after the country's trade deficit widened more than expected amid renewed global trade war fears. And the Indian currency was the hardest hit among Asian currencies, which suffered due to a strong US dollar and the emergence of macroeconomic headwinds. Bond markets, however, showed more resilience and bounced back sharply despite looming rate hikes fears, and the US 10-year benchmark bond yield tumbled to 7.89% from around 7.94%. Let's shift focus to commodities then, and we have Jayesh Khilnani joining us to give us all these updates. Jayesh, good morning.
Morning, Agam. Not looking good for the entire commodities pack on the whole. If you look at oil prices, they're trading about 1% lower after declining for a 4th week in a row. In fact, on Friday, we saw that WTI did fall more than 2.5%. Now, this is on the back of Saudi Arabia and Russia, which are actually pushing the fellow members to relax the controls that were put in place for the output production cut. In fact, the Russian energy minister has suggested that these caps be lifted as soon as July July the 1st. Also remember that the OPEC ministers will be meeting in Vienna on Friday to discuss the output production cuts. So we'll have to wait and watch how the entire situation pans out. But if you look at the base metal space also, the LME index itself halted its 3-week advance and posted loss for itself. Metals retreated on account of 3 factors. One was the rising trade tensions. The other was the strong dollar that we have seen in the recent past. And also last week, China reported soft macro data. On the back of this, zinc, which is the top loser, down 3.4%. Aluminium and copper declined more than 2% each, while lead was down nearly 2%. There was nickel and tin, which also closed marginally lower. Now, if you look at precious metals, gold, in fact, posted its biggest fall since December 2016. And on account of this, volatility has now sank to a 1-year low.
Okay, thanks for that, Jayesh. We'll be watching out for some of those cues, but on to some consolidation in the telecom space. PTI reports that Vodafone Idea merger is likely to get a final approval from the Department of Telecom today. Somit Sarkar is once again here with us to give us more details. Somit, what will be the combined entity and what will it look like post the merger?
So they're expected to receive this final approval from the Department of Telecommunication today. Now they formally announced this merger on March 20th, and nearly after March 20th last year, nearly after 15 months, they are expected to receive all the approvals. Now, both the companies were expecting the merger to complete before June 38th, and Idea Cellular will be holding an extraordinary general meeting on June 26th to change the name of the company to Vodafone Idea Limited. Now, the combined entity will be the #1 operator in India with a revenue market share of close to 40%. The customer base of the combined entity is expected to be more than 43 crore, and they are expected to have more than 1,100 megahertz of spectrum to service these customers. On the financial side, the net debt of the company is expected to be around 86,000 crore rupees, and the net debt to EBITDA is expected to be around 6.3 times. Now, Idea's debt post the ATC and Industar deal is expected to come down to around 41,826 crore rupees, which means that Vodafone India can only contribute close to 44,300 crore rupees in the combined entity, according to the merger and acquisition guidelines of the merger. And the combined entity is expected to have a total revenue of close to 60,600 crore rupees with an EBITDA margin of around 22.5%. On the market share front, the combined entity is expected to be the #1 operator in at least 11 of the 22 circles present in India, and in the remaining 11 circles, they are expected to be in the #2 or in the #3 position. On the synergy side, in the last conference call, Idea management expected the operational synergies to be higher than what they had earlier guided. Earlier, the management had guided an operational synergy of close to 14,000 crore rupees from the 4th full year of the merger. Now, they are expecting an immediate synergy of close to around 2,000 crore rupees on the merger on overlapping tower sites. The management also said that the merged company would not require any incremental external cash, as the synergy benefits, longer tenure of deferred spectrum liability and market correction will take care of all the cash requirements that the combined entity will need. Now, the only challenge that the combined entity will have is that they'll have to bring down their revenue market share in circles where it is exceeding 50%. Now, this is according to the merger and acquisition guidelines of the Department of Telecommunication, and the merged entity's market share is exceeding 50% mark in 4 circles, that is Haryana, Kerala, Maharashtra and Gujarat.
Somit, thanks for that. But with that, there will be several other stocks which will be in focus on the back of news, and we have Shraddha Babla joining us to give us that list. Shraddha, good morning.
Good morning, Agam. I'm going to start off with a negative development, and that's for PNC Infratech, where it has said that the lowest bid for Purvanchal Expressway has been cancelled. Back in May, the company had been declared as the lowest bidder, so hence negative development. NBCC has said it's expecting a revenue growth of about 40% in FY19, and they're looking at African markets for contracts. That's according to Bloomberg News. Panacea Biotech, along with its partner Apcotex, has settled the patent dispute with Celgene Corporation. This is to do with the anti-cancer drug Abraxane, and on the back of the settlement, Panacea will get a non-exclusive marketing agreement. That apart, you have Shreyas Shipping, which will be in focus as well. Now, its associate company, Avana Logistic, has filed a DRHP with the SEBI for an IPO, so watch out for that name. In bulk deals, you have Pokarna Limited. Known investor Ashish Kacholia sold 1.2% stake on Friday. He had about 7.5% stake as of 31st March 2018, so that's another stock to watch out for. And lastly, Balrampur Chini, where California Public Employees Retirement System has bought 0.5% stake. So these are some of the stocks to track.
Shraddha, thanks for giving us those details. But we have Somit Sarkar still with us, and this time he's going to give us the big broking calls for the day. Somit?
The big brokerage calls for the day first we have is Motilal Oswal on TCS. Now the brokerage has maintained its neutral rating on the stock with a target price of around 1,750. Now according to the brokerage, the 16,000 crore rupees buyback of TCS will be slightly negative on the EPS front. However, when it comes to the return ratios, it is a positive move. Now Motilal Oswal is expecting the EPS of the company to decline by around 50 basis points as cash reduction will lead to lower other income. However, the return on equity would increase because of the lower net worth of the company. Now, the 16,000 crore rupees buyback implies that the company is returning nearly 40% of their cash balance to the shareholders. Now, the brokerage also says that historically the company has maintained a 75% dividend payout, 75% payout to shareholders over the last 3 years. Lastly, the brokerage is expecting the acceptance ratio likely to be higher on the retail side like the previous time. Second, we have is Credit Suisse on Larsen & Toubro. Now, the brokerage has maintained its outperform rating on the stock with a target price of 1,700 rupees. Now the brokerage says that in this year there has been strong order inflow from the domestic side. Now the state governments have been giving lot more order to L&T. However, on the private sector side, the ordering still continues to be low in the single digit format. Now the brokerage is maintaining its outperform rating on the stock on the back of very strong order inflow, execution pickup, steady profit, and because of the steady profitability that the brokerage is expecting across segments of L&T. On the valuation side, it says that the valuations still look reasonable for L&T. And lastly, it says that as the investment cycle is building up, there is more upside possibility when it comes to L&T.
Somit, thanks for bringing us those details. But moving on, there's a lot to talk about through the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also few stories that you should consider reading on the website bloombergquint.com. Here they are. The government has decided not to extend the ceasefire in Jammu and Kashmir that was announced at the beginning of the holy month of Ramzan. The Defense Ministry issued a statement to that effect on Sunday. And investigative agencies probing the alleged Punjab National Bank fraud have detected that diamond merchant Nirav Modi possessed at least half a dozen Indian passports, and a fresh FIR is being considered against him for this. Meanwhile, the Enforcement Directorate is set to soon file a fresh charge sheet against Vijay Mallya on his companies on the charges of money laundering and for allegedly cheating a consortium of nationalized banks. And moving on, the rich are getting a lot richer, and they are getting that way a lot faster. Millionaires now control half of the world's personal wealth, which rose 12% from 2016 to 2019. $1 trillion last year. And according to a report from Boston Consulting Group, what's more, Asia takes the lead when it comes to personal wealth. Here's a special report. And Russia has been the perfect host to 32 national teams playing this year's World Cup. There have been no hiccups so far, but the Putin administration drew up a long list of exclusions in the lead to up to what is arguably one of the most watched sporting events in the world. with that, it's a wrap on this edition of Daybreak. But all you need to know is up next, so stay tuned in a Bloomberg Quint Live.